people. One of the things you talk about is fiat currencies, and there was a study done, and it showed that no fiat currency has survived in the long run. And the average life of expectancy for a fiat currency is about 27 years. So what are the ways that fiat currencies die?
Okay. Well, first and foremost, thanks for having me on. I just want to reiterate that. Secondly, it's the 21st century gold rush, just so people understand. This is actual right now, and I've been in this market for about a decade now. As far as fiat currencies, the history, it's very long and large. And when I wrote this guide, I didn't want to go on forever about history. I wanted to kind of cut to the chase and get to the point of what's happening right now and why it matters to you at this moment. So the history of fiat currencies is you could write a book on that. I mean, you could literally write a volume that's huge. So, and there's been many guys who came before me who've written about it, and I've learned from them. So essentially a fiat currency, just so people understand who is out there who maybe is a novice and doesn't understand what that means, it's essentially Latin for let it be, and it's just the government can print fiat currency or create it digitally, or banks can do it too with the fractional reserve lending model that we currently have. It essentially is a currency that's backed by faith and doesn't have any real commodity backing. Whereas if you look back in history, there's been specie money that's been backed by precious metals or other commodities or seashells or what have you. The further you go back, there's been crazy commodities or things that have been used as currency. But yes, like you said, fiat currency historically always goes to zero. And some of them have lasted for very short time frames, and some have lasted for, there's been a couple that have lasted for over 100 years now. The British pound sterling essentially went full fiat in like the 20s. So, I mean, they're the most successful fiat currency of all time. And it makes sense because the Bank of England is one of the oldest central banks, and it's still around somehow. It's been around for 400 years, I believe. So the history is long, it's sordid, it's interesting. I think what readers will find most interesting is where it was born from. It's kind of ironic that it was born in China around the time of Marco Polo. And I had shared that with someone who works here, and they didn't even think Marco Polo was a real person, right? They thought it was like a cartoon character. And I said, no, man, that guy went to Asia and he traveled around, and he was surprised because in Asia and China, I guess, at that time, he was going through Silk Road and he saw people trading and using script, like papers that looked very, very pretty and elegant, but they were papers nonetheless. And the reason they were trading with those is because if you didn't agree to do it, you'd get killed, essentially. I mean, it was through the threat of either incarceration or death. And if you were caught faking it and creating ones that weren't official, that was the same type of situation. You'd get put to death for counterfeiting. So it's got a long sordid history. It's been around, and the reason why I find it somewhat ironic today is that China was the original creator of fiat currency, and now they're one of the largest consumers and miners of gold, physical gold, not derivatives, but physical gold. And it's also somewhat ironic because they're on the cutting edge as far as digital currency usage through smartphones and stuff like that. So you have a culture that has limited, I think, understanding of the history of money and how it works and how fiat currency originated from there. And now they're running around using their phones to purchase and buy things. And eventually, the full movement away from physical cash notes is certainly possible. And it'd be much easier to do it in China than it would, say, in the United States or in Germany or in other countries where they've gotten accustomed to using cash and appreciating the privacy that cash offers. Whereas in China, the young people maybe don't know their history. Maybe they don't understand that the state with full digital currencies has full control over that, and they can see everything that's going on transaction-wise. So I'm not trying to say that we're going to a full-fledged world where it's just nothing but cryptocurrencies or digital currencies or this or that. All I'm saying is the trend in China is somewhat interesting, and the fact that they are a leader in terms of digital currency, and they are the original place where fiat currency was issued, where it came from.
There are different ways that fiat currencies have died throughout history. There can be hyperinflation, you talked about in the book. They've failed because of wars. They've failed because just a transition to a new system. Can you expand a little bit on that?
Oh, yeah, sure. There's been various ways that they've gone out of existence or been converted into new currencies. So like, for instance, in Mexico, you can look in the mid 90s, 1994, I believe, Mexico had a crisis with their peso. And what they do, they just knocked the zero off of it and said, now we have the new Mexican peso. So it was going through this high inflationary moment, and the powers that were at the time, they simply revalued the new peso, and anyone who was holding the old pesos lost a huge amount of their purchasing power. So that's just one example. I mean, there's been other examples, of course, where you have military takeovers, and whoever owned the currency of the losers just lost. They just lost all their purchasing power because those scripts aren't worth anything now. So it's a sordid affair as far as whoever the powers that be are in control. Obviously, they think if they're in control, then they should be in control of the money at all times too, right? I mean, that essentially, if you have the power to kill someone, you'd want to also have the power to legally, choose who's going to print the money and who's going to have control over the money. Those kind of go hand in hand. They're all about control. So, throughout the history, it's kind of a long affair to go through each example, but anybody who's interested in that, there's a lot of people who've written about it, and there's a lot of great history. Another interesting history is probably in France in early 1800s. That's a somewhat interesting history because it's got a lot of things that are similar today that are going on, where you have you basically had a class of really, really wealthy people, and then a large class of peasants. And at some point, the peasants got fed up, and there was a revolution, and there was a lot of bloodshed from it. And then eventually, when that kind of stuff happens, eventually a strongman dictator military guy comes through, and that was Napoleon Bonaparte. And so the history about fiat currency and what it's been, it's intertwined with the history of mankind, essentially, and how politics has moved history throughout time, and how people have come and gone throughout history. It's just, money is, if you think about it, it's like we only have so much time on this earth, and money, we spend a lot of it trying to make that money and trying to keep that money. So it's got a long history, and it's probably longer than our podcast listeners would want me to try and stumble through.
So getting into investing in precious metals, one of the reasons is possibly because there's going to be a currency crisis in the future, possibly. So what are some of the reasons you think, and that you outline in the book, why we're going to see a currency crisis for the U.S. dollar in the future?
I'm not necessarily sure if we'll see a currency crisis or not. It just looks like mathematically we're in trouble as far as, what we owe in terms of overall debt levels and what we promised people who are in the system. For instance, if you look at our unfunded liability totals, the amount that we've promised through Medicare and Social Security and various other things, I mean, the U.S. government's on the hook for, and I'm talking about a net present value today, they're on the hook, according to Dr. Kotlikoff, they're on the hook for $210 trillion. $210 trillion is like, it's like 20, it's 10 times the GDP of the country. I mean, imagine that. It's like you make $100,000 a year and you owe someone $1 million net present value. So figure out how you're going to pay them back. But you have the printing press, so figure it out. What do you think you're going to do, right? You're probably just going to debase your currency. That's usually the way governments do it. They when they get in this situation, they have one of two choices. It's default, flat out, just say, look, we're not paying you back, screw you. And that usually doesn't work too well for a lot of countries. I mean, we've had that happen in Argentina, for instance, and then they have to go through a decade where they can't get anybody to loan them any money because you've already defaulted and you've shown the fact that you'll possibly could do it again. And if they did get a loan, it would be at exorbitant premiums. It would be way too expensive. So we probably won't do a default. What we'll do is more likely a mixture of both. You'll see a default on the private end, people who have pension funds and stuff like that with cities and all those types of things. They'll get dimes, quarters on the dollar, perhaps, of what they were promised. That's possible. And then on the other side of people just who hold the currency, you're talking about compounding year after year of lies when it comes to what is the true price inflation of our country versus what the government will tell you what it is. And if you do that for a decade or two running, you can cut the debt in half or more easy. So that's essentially where we are. We've been doing that for about a decade now that I've been paying attention. I mean, they'll tell you what the inflation rate is, and it's not true. Not true at all. If you measure things like healthcare, or if you measure things like the expense of education, or if you measure things like the expense of living or eating, basic things, they'll use all types of data trickery to lie to us about what the true inflation rate is. And ultimately, it's always on their benefit if they do that, right? They've made promises that they can't deliver upon, and in order to deliver upon those promises, at least nominally, they need to devalue them.
Now, you also discuss in the book why it looks like the decade of 2020 is going to be extremely volatile. Can you expand on that?
Yeah, I mean, the 2020s, you have a whole bunch of things happening here, like we just discussed about the unfunded liabilities that are coming about. And you have demographically the baby boomers, who are the largest swath of our population, who are retiring at a rate of about 10,000 each a day. Now, I had to go look at that number again because that's mind-boggling. But if you think about it, that's 10,000 workers in the system who are retiring every day, right? What are they going to be doing? They're going to be collecting on their Social Security checks. They're going to be collecting on their pension funds or whatever they can get out of their pension funds. So that's essentially where I'm thinking in the next decade, we're going to see either you'll see the U.S. government continue what they're doing now by trying to prop up the stock market. I don't know how long they can continue that. I mean, can that just go on for the whole next decade too without any type of recession or any type of crisis in the stock market? I'm not sure that that's possible, but we will see, I suppose. But as far as reality and the facts of the matter, I just think that the reason why I wrote the guide, the whole point of it is essentially you need to hedge your bets. It's if you live under a fiat currency regime, mathematically, empirically, if you go back and look at the math, it makes sense to have a portion of your wealth in something that's tangible, completely outside of the hold of anyone else. That's just basic common sense. But some people, they look at it and they have this cultural meme, I think, that if you buy gold or silver, you're like some end of the world doomsday kook. And it's not even close to true. That's the type of spin that a Wall Street charlatan would put on it, because they're not going to make any money if you buy gold or silver. But I mean, that's essentially it. It's just basic common sense. You have to have a portion of your wealth outside of anyone else's control.
Now, there's a myth going around it's been going around for a while that, the ideal amount of gold and silver in one's portfolio is about 10%. Mm-hmm. But you explain in your book why the optimal percentage is more like 25%.
Right. This goes back to a study that a guy by the name of Jeff Christian performed. And anyone who's been in this market for a while may know that name. Jeffrey Christian is a guy who works at CPM Group. And they may not like him because Jeffrey Christian is kind of, I don't know, there's a lot of people who think he's part of the manipulation that goes on in gold and silver. He's basically been correct on a lot of his forecasts over the time I've been in this industry. Whether or not he's, working for the powers that be that are manipulating gold or silver, that's up for other people to judge. But as far as what he's done track record wise and the things that I've watched as far as him making calls of, silver or gold being a little bit ahead of themselves in 2011 and saying that this market needs to turn a little downward, and inevitably it did. I mean, he was only one of the few that were out there saying a public record, right? So a lot of times when I hear him talk, I listen because his track record's pretty solid. As far as the empirical evidence that he has a study that he ran from 1968 to 2016, the end of 2016. And it essentially, he had three things that he was measuring. It was bonds, like U.S. Treasuries and U.S. bonds, equities, like the S&P 500 shares, right, versus bullion. And he ran 500 various use cases with different mixtures of all three. So what he ended up coming up with, the best between risk reward as far as allocation was 25% gold, just flat out 25% gold. And that's based on data from 1968 through 2016, right? And there was periods of time where probably silver outperformed gold. There's periods of time when platinum or palladium outperformed. But he's doing a 48-year study, right? And the reason why it's so important is because it's running a study that started pretty much when the fiat currency system started here in the United States. 1971 was when Nixon took us off the last ties to gold, and the Bretton Woods Agreement got killed in middle August 1971. And so the study essentially runs, well, what should you own and in what allocation throughout a full fiat currency era? And gold has proven itself to be very, very robust in terms of risk reward. And we're talking about, that's the study is running through a bull market in 1980, a bear market from there all the way to about 2000. And what I would argue is still a bull market in the 21st century, though we've had about 4 or 5 years of grinding downward sideways pressure. But ultimately, this is still, I think, a 21st century gold rush. So the one other point about the study was he's only measuring it versus U.S. bonds, U.S. treasuries, and just S&P 500 equity, right? So he doesn't take into account, dividends. So if you're someone who likes dividends in your equity shares and you reinvest with those dividends and you use compounding as your magic formula to grow your wealth, and that's like a Warren Buffett strategy, right? So that study does not take that into account, and nor does it take into account anything to do with real estate or cash flow real estate or anything like that. So take the 25% allocation study with a grain of salt, knowing that, maybe that doesn't mean you should buy 25%, put all 25% of your wealth into gold. That's probably not what you should be doing, but you should definitely take it into account when you're thinking about it versus just general equities in general. Over 50 years, gold has performed very, very well, and versus bonds as well. So.
Now, what about gold versus silver? And also you talk about in the book, platinum and palladium. I know some people have argued that gold and silver are really the only assets throughout history that have been money, and platinum and palladium haven't been. So why invest in, first of all, silver, and then also platinum and palladium?
Well, silver is very, very cheap, I believe, as you look at its long-term value versus other things in the economy. I mean, currently silver versus, say, like the Dow Jones Industrial Average, or silver versus the S&P 500 index, or silver versus the median price home. It's getting pretty cheap relative to the various asset classes that are out there right now. I mean, everyone's kind of dubbed this current situation that we're in as the everything bubble. I mean, and yeah, there's an everything bubble perhaps in everything but precious metals at the moment. And that's all well and good, especially for anyone out there who's buying precious metals. It's I think a smart place to be putting your capital out right now because of the prices. Silver is like $16 an ounce. If you're buying bullion, you're talking about maybe another 50 cents to $1 if you're getting a really good sale or a deal for just wrought bullion products. That's, to me, $17 silver in the long haul is probably going to hold its value, and it'll probably go up as the 2020s come along. And if the dollar gets debased, like I believe it will, over the next few decades, it should perform well. You also have to kind of look at silver in the term of it. Yeah, it's a monetary metal, but central banks don't necessarily hoard it. It's not for that. It's definitely a monetary metal, though, amongst people. For average people, I do think that silver has value. They do understand that. They learned about the history of silver being money, and so they know that. And silver, as far as an industrial commodity, is second only to oil and all the things it's in. It's absolutely amazing the amount of products we use it in. And so the question of, whether or not we're going to keep using silver, yeah, we will, and we have to, because without silver, you basically won't have our modern way of life. It just won't work. So silver has the monetary aspect to it, and it also has the aspect of being in thousands upon thousands of products that we use every day. And I don't know, people might argue, yeah, there's some thrifting that could go on. You could replace some of it with copper or this or that, but it doesn't perform as well connectivity wise, and it doesn't have all the various elements that copper or any other nefarious regular metal. It just doesn't have all the attributes that silver has. Silver is obviously, it's the most reflective, it's the most conductive. Heat moves through silver faster than any other metal. I mean, it's got all these amazing components to it. It's very soft, it's ductile, it's easy to use in industry, and it's used, like I said, in lots of things that aren't going away anytime soon. So it's a necessary precious metal. It's precious metal, and it's only $17 an ounce. So I just kind of look at the federal government situation, and I look at $17 silver, and I think, well, that's a store of value that probably should be pretty good in the next decade or two. On the platinum and palladium aspects, those metals have a lot of uses that I write about in the book. The main ones that most people will point to are their usage in combustible engines and trying to clean up the exhaust from combustible engines. There was a recent scandal that occurred with platinum as far as Volkswagen diesel scandal. And so there was a lot of people thinking that, oh, well, the diesel market's going down, and it is as far as sales in Europe. I saw a story the other day about it. So platinum's had some downward pressure on its price recently due to that diesel scandal with Volkswagen and the lack of sales that are going on in Europe. Whereas palladium, if you look at palladium's supply right now on the COMEX in the warehouses is so low. It's one of the lowest levels I've seen. If you look at the chart, it's at one of the lowest levels since the COMEX started trading palladium. And then when you look at how much is in the ETFs or how much is above ground, it's really not a whole lot. Then you have to kind of question, well, where's palladium even coming out of? I mean, 75% of it's coming out of two countries, South Africa and Russia. South Africa always has trouble with their mining industry. There's always problems and strife that happen there, and occasionally there's strikes, and there's times where palladium doesn't even come out of that country, or it doesn't come out in that country in enough supply for it to meet the demand. And then you have Russia, of course, and, you know, Lord knows what will happen politically with Russia in the future. So 75% of the market comes from those two countries, and there's not much right now above ground in terms of palladium. So it's a sticky issue, and you have palladium now. It's been over $1,000 an ounce for a while. It wouldn't surprise me at all to see it get near and start aggressively getting closer to gold's price. You know, there could be a situation where all of a sudden you have palladium above the price of gold if we have a squeeze. And if you look back in the guide, I show a bunch of charts. There's been times when palladium's price has been well above gold, like 4 times its price above gold in the early 2000s, because there was an issue with supply. And there's a funny story about, it's not funny. If you're a shareholder of Ford, it's not funny, but Ford lost $1 billion because the purchasing department lost their head and started buying all this palladium unhedged. And then when the price fell through the floor, they declare $1 billion loss. So, I mean, the types of manias that can happen in these commodity markets are interesting. And if you look back at the charts and you study why they occur, they're pretty interesting to me, at least, because I find all 4 precious metals, they all have their various characteristics that are important as far as value and such. But palladium and platinum are interesting in the sense that, you know, they are used in cars and in combustible engines, but they're used in other ways too. You have them in jewelry, in various industrial applications too. Platinum is used a lot in terms of there's all types of solvents and stuff that platinum's used to help in creating products and stuff. So Johnson Matthey, a lot of times, like if you go and look on Johnson Matthey's website, you'll find a lot of information on both those metals that's, you know, much more eloquent than I could ever explain on a podcast.
Now, I'd like to discuss a little bit regarding the best products to buy if people are interested in learning, you know, purchasing precious metals.
Sure.
So there are a lot of different things. You can get, you know, the 100-ounce bars of silver. You can get coins. You can get junk silver. What is your perspective on some of the best ways to invest in physical precious metals?
Sure. The physical precious metal market, and it depends on what metal you're talking about, but let's just start with silver because that's the one that probably most people can afford. I mean, it's $17 an ounce. The silver market you're talking about everything from rounds and bars, which I can be very explicit here. Bullion bars are just, you know, simple ingots that have typically 3/9 fine silver in them. You have rounds, they look like coins, but they're specifically struck by private mints. Then you have coins, which are struck by government mints or sovereign mints. Sometimes people refer to them as. So you have a variance between government coinage, like the American Silver Eagle coin, which is probably the most popular coin in the entire industry in terms of overall sales. Then you have the Royal Canadian Mint coin. That's probably the second most popular, the Silver Maple Leaf. Then you have Austrian Mint, Silver Philharmonics, That's a very popular coin in Europe because it is legal tender in Europe. It's got a euro stamp upon it. So coins are interesting in terms that they have a legal tender aspect to them. If you go and look at a silver eagle, for example, it says $1, right? And so people get confused. They look at that and they're like, why would I pay anything more? It says $1. What are you selling me here, right? They get totally confused about that. Well, there's a reason why they put a low face value on it, is so you won't compete with the currency that they're printing, right? That's the first thing. And then secondly, it's kind of interesting in the fact that, yeah, it's legal tender, and that means you could actually use it. Like if I wanted to buy, say, Elijah, I liked your car, and you were interested in selling it to me, we could literally write down a contract, and I could explicitly say, I'll pay you 300 American Silver Eagles, and I explicitly write, how many ounces that is, and we could draw up a contract and have it, someone sign it, an actuary could sign it, and then if I didn't deliver the silver, or if you didn't deliver me the car, I could probably take you to court and explicitly get you to deliver that or something like kind. So it's interesting in the terms of, yeah, it's legal tender, so it has a little bit of an optionality to it that maybe the other metals might not if they're privately struck. Right? You can't make a contract with private rounds. You can't make a contract with private bars. That would be not court enforceable, I don't believe. So, I mean, and then in the bars and the rounds, you'll get more ounces for your currency. They'll be a little bit cheaper because typically the private mints produce their products at just a lower price in general. They do it at a lower cost, whereas the mints typically have a little bit higher fee for their coins. For example, the most expensive per ounce in general is the American Silver Eagle. And then down the line, probably the Royal Canadian Mint Maple Leaf is probably the next most expensive as far as over spot prices. In terms of the market in general, the Royal Canadian Maple Leaf coin right now may be the best value option for people out there. If they want to have something that's in a small size and has cutting edge, it has cutting edge design in terms of being anti-counterfeit and the design being very unique and being very pretty, I believe. And it's 4 nines fine, which is somewhat interesting, although I think that's kind of a marketing trick. I don't think people understand that the fourth 9 is only worth a few cents on the ounce. But it's still a beautiful coin, and it's our Northern Borders coin, and it's guaranteed by the Canadian government. And the Royal Canadian Mint makes fine products. So yeah, coins are great, and so are bars and rounds. The question also then becomes, privacy. Some of the coins, you could sell any amount of them back in the United States to any dealer, and they don't have to actually inform the IRS that the transaction occurs. Of course, if you make any profits, powers that be want you to declare your taxes, of course. You talk to a tax advisor about that. But if you came to sell me, 1,000 ounces or more of private rounds, this or that, and I would have to inform the IRS that the transaction occurred. So some people just don't want the IRS knowing any of their business. They just flat out don't want any of that stuff going on. They don't want to give people their social security number or any of that kind of thing. So that's a little bit of an interesting aspect about privacy that I write about in the guide that people can obviously learn more about. So yeah, I guess the product, I go through the products in a little bit in general about products in the guide. But if someone really wants to go down the rabbit hole as far as product discussion, what's better, this versus that, people here can answer them on the phone. We get questions all the time. Some people prefer junk silver, some people prefer, bars, some people prefer rounds. It really depends upon, what your ultimate goal is, what's most important to you, and things like that, as far as what's the best product for you.
Well, James Anderson, thank you so much for joining us today. Before we let you go, I wanted to just discuss one last topic, kind of a little bit off precious metals. It's about Bitcoin, because you actually also discuss cryptocurrencies in the book. And you talk about that maybe the blockchain, correct me if I'm wrong, but your opinion is maybe the blockchain is, it seems like this revolutionary new technology, but Bitcoin itself doesn't seem to be scalable. Mm-hmm. It's not something that could really replace the financial system.
Yeah. as far as scalability, there's this statistic that talks about TPS right now, and I'm sure there's people out there who will argue that Bitcoin is doing what it's, what programmers are doing what they can to speed that up. But when I wrote the book a few months ago, it was literally 7 transactions per second that Bitcoin had max capacity of being able to do, whereas Visa can do hundreds per second. PayPal can even do, I think, 125 per second, I believe. So, as far as in terms of thinking in terms of tens of thousands or hundreds of thousands or millions of people shopping at one time, 7 transactions per second, it's not going to cut it. It's just not going to cut it. So when I look at Bitcoin, I think it's kind of interesting. I didn't get to go into it in the guide, but only recently there's even been studies done which go back to the Mt. Gox time and just talks about how obvious it was that there's been a ramp job in the price during the Mt. Gox period. A ramp job, it's kind of confusing for some people. They don't understand, but for a ramp, all you do is you need a couple traders who work together and they collude to basically one buys, one sells, one buys, one sells, one buys, one sells, and you can keep doing this over and over and over and over and driving the price higher. I'm pretty confident they were never. Obviously, the study was done using empirical data to prove the fact. I haven't gotten to read it because it's it's a research paper, so I'm sure it's $50 to $100 to get it. But if you just read even the small amount of stuff that's there, it's probably, my hunch is that it happened in Mt. Gox, and it's probably happening right now too on a larger scale, because it's an unregulated industry. You have Japan and China over there, who essentially that's where most of the Bitcoin are being mined, especially in China. So it would make total sense that whoever was mining those Bitcoin would want to drive the price higher and bring in a bunch of people into that market to take advantage of, take their currency for the Bitcoin, and then maybe eventually let the Bitcoin go its way, whatever way it goes. And then now with the CME, you can trade on the downside too, so they can make money both ways. You can basically drive the price higher, sell off a bunch of Bitcoin to the next fool, and then as the price goes down, if you're not ramping up the market, you can just go on to the CME and short the Bitcoin futures. So you can make money both ways. So maybe years from now it'll come out that there's been scams, and if you think about it in terms of the central banks, they made such a mess of the entire financial industry in 2008. It would make sense if they figured out we should probably have some fall guy to make us look credible again. So let's make this thing the ultimate fraud of all time, and then we'll get some credibility back. Which, if people fall for that, they're damn fools. But it's always a way to say, but you look at the free market. The free market can't do it, which is totally untrue. But that'll be essentially the finger pointing that will happen if Bitcoin becomes a huge fraud. As far as the transactions per second, it's kind of like a horse and buggy. Eventually, there'll be other cryptocurrencies that come out that are going to be incredible. Supposedly Hashgraphs technology is going to be blowing out any competitor ever, and it could probably do transactions per second. But that's yet to be seen. Nobody knows how many transactions per second it can do, nor what cryptocurrencies will be built on the platforms, or if there will ever even be cryptocurrencies built on the platform. So, and as far as people going and speculating in that industry, people always want to make money from nothing. They just think that they're going to get rich from just trading and holding on to something. That's not how you get rich. You get rich by building value and serving other people with the value. That's how you get rich. You build businesses, or you work for someone else and serve people. That's how you make money. You save, you do prudent, you invest well. You don't make money by just buying a couple magic beans and somehow they sprout and you can go climb to heaven. That's not how things work in the real world, or maybe a couple people can work for, but ultimately, in the larger scale, that's not how most people make real wealth.
All right. Well, James Anderson, thank you so much for your time today.
Cryptocurrency News Channel. Your new future. Thank you. Follow us on YouTube.